Hi, this is Zach from Zach's Traders Cafe with a look at the major markets on Monday, the 4th of July. Starting off with the FTSE 100, and here just a vertical move after that bear trap below the 58.45 initial June support. That was quickly followed by a recovery of this uptrend line from February at 59.50. And really, as soon as we saw that with a two-day reversal, it looked as though this market was heading higher. 66.20 was the initial target, which was a slightly lower parallel than what I've drawn now. That's been upgraded to 6800, which is the top of a rising trend channel from the end of November last year. This stage, Eddie, back below that old April resistance around 64.20 would even begin to delay the upside scenario. Next up, the DAX, and here playing catch up with the FTSE 100, trying to fill this gap down to 10,104. Still about 300 points to go. One would expect this to be filled, even if we then revert back towards the floor of the range, or the recent range, which is around 9,500 to 10,300. So looks like plenty of upside there for the DAX, and maybe even it could be the case that some traders decide to buy into the DAX rather than to buy into the FTSE. But with the FTSE as it is, difficult to argue with that either. Onto the US markets, which obviously are closed for July the 4th celebrations, but just take a look at them anyway after Friday's close. Interesting with the Dow right up at that resistance line from April, and what we're looking for here is an end of day close above 18,000, really, to give us an implied target as high as 18,800 when Wall Street gets back from its holidays. Onto the S&P, and the key here was the close above 2100, big psychological level there. Looking for still at least 2120, which is or was the best levels, best trading zone of last month. After that, we could see much higher levels towards 2200. As for the Nasdaq 100, here we're powering towards the 4,500 level, and that is expected at least while there's no break back below the 10-day moving average at 43.68. After that, further gains towards 46 or 4,700 could be seen, depending on how the market behaves. But looking at the RSI at 55 shows that it's just getting underway even after the 200 points plus that we've seen off the low of June. Onto the currencies, and cable looking rather weak, as you might expect after the hints from the Bank of England governor. Possible target here on the downside towards $1.29, which would be a breakout of this bear flag that we've seen, the consolidation between 132, 135 roughly. So 129 is this support line from the beginning of the year, running through January and February lows, and hitting early July as a 129 target. After that, things could get rather nasty, but hopefully 129 will at least be the initial support for this market if we see a quick break back below 132 for Monday or Tuesday. Onto the euro, and somewhat sidelined, but we've still got this bear trap rebound from below the 200-day moving average at 110.94. Above that, there's the possibility of up to 114, especially now that the RSI at 55 has crossed above the neutral 50 level. Onto the dollar yen, and here pressured by the 10-day moving average at 103.32. Below that, we could hit the support line from February at 101 yen, although at this stage doesn't look as though we're going to get much lower than that. Finishing off with gold, and here we have this U-shaped, very, very strong U-shaped bull flag reversal. 1341 the close for Friday, and we could head as high as 1360 at the top of this trend channel from December over the next week. So looking very, very strong for gold. 1360 in fact looks like the minimum on the upside, and only back below let's say the 1310, 1320 level would really delay the upside scenario. You can see that the high before the spike earlier in June was $1,315, and we're not expected to go back below that in a hurry. That's it from me. More updates at the same time on Tuesday.